Hi and welcome to Nestegg's monthly ETF market update. Joining me today is Kanish Chugh, the co-head of sales from ETF Securities. Kanish, welcome back.
Thank you for having me.
And it's one of those, we were just having discussions across this. There's a few things that have changed. We were having a few different pointers across international inflows, outflows, and sort of general market sentiment. But I wanted to get a bit more of an idea. But before we do that, could you tell me just a bit of an overview of what's going on?
So the ETF market currently sits at 41.15 billion. Now that's actually saw a net increase of 3.7% from the month of July to the month of August. Now, in terms of net inflows, there was nearly $532 million of inflows, but the actual AUM shift was nearly 1.4 billion. So clearly an indication that there's some market moves there that are really factored into the net increase in terms of the total AUM size. There was a big shift in when we look at break it down by sectors. So global equity, so broad global equity ETFs, saw an increase in AUM of about 700 million. Now that obviously means your likes of S&P 500, your Nasdaq NDQ, Nasdaq 100, your MSCI World, etc. That's probably driven a lot of that market move, because in terms of actual net inflows, it was significantly less than that 730 million.
I would say large amounts of volatility within the market inflows and outflows. But do we see that as something which is, I mean, it's always tricky with the ETF market. Do you see it as an indicator of a greater shift, or is this something which is just the way the beast is working?
I think it's a combination. I think as the market increases in size in terms of ETFs, I think, and the ETFs that we're tracking, when you actually look at net inflows in terms of individual ETFs, still the top 5 are plain vanilla, as I like to call them, equity or fixed income products. So the largest inflow in terms of a product was the BetaShares A200 ETF, had close to $108 million in. So as these big, broad index ETFs get larger and larger, then the market shifts will shift the total size of the ETF market.
Absolutely. We'll get back into that as well. But one thing I've been tracking, and I think it's been quite hard to not see it, is the new ETF which has come out from you guys, which is the ACDC or the Akadaka.
Yes.
Tell me more about that. It's interesting.
Yeah, so I guess for us, we want to broaden out the future present range that we have. Now, in that future present range, we have our robotics ETF and automation, so Robo, and our global technology ETF Tech. And we felt that the thematic around battery technology and lithium mining, it's a growing space. The idea of energy storage, electric vehicles, even to the point where I was mentioning earlier, lithium batteries are not just used in electric vehicles. That's where our mind automatically goes. But our mobile phones, our laptops, our desktops, even when we think about the new types of robotics or automation, they're going to be needing some form of battery source. So how do we capture that thematic? Now, in Australia, it's very hard. This ETF is a portfolio of 28 stocks. It's a global portfolio. It's equal weight as well. And one thing to consider is it looks at all different types of battery technology, so not just lithium. It looks at flow-based technology, nickel, sodium, hydrogen-based. And then the other side of it is lithium mining. And again, lithium mining, there's a lot of individual stocks out there, a lot of Australian stocks. Orocobre is one example. And again, our view is don't take the single stock risk. Take the view of buying into a portfolio, a diversified portfolio of different names from around the world, and have that in the portfolio. We're not looking to pick the winners or losers, we're looking to buy into the thematic.
Yeah, for sure. And I think it's interesting to see, it's not so much the actual resource that we're talking about here, it's the real innovation in the tech itself, so the innovation within battery tech. And lo and behold, 10 years ago, we didn't have iPhones, we didn't have laptops which could do 101 different things. Our batteries really did their job with the limited things that we needed them to do. But these days it's being stretched and stretched and stretched. So we need these things to work harder and faster throughout the year. But is that something where, and the background of this, is this an index which has been tracked previously before? Is this brand new?
No, so it's an index that it's already been tracked. So our former parent company in the UK, ETF Securities, actually was running this ETF, and they launched it earlier this year. So it was launched on the London Stock Exchange under the ticker BAT, B-A-T-T. So we're tracking the same index. It's the Sol Active Battery Value Chain Technology Index. And simply what we're trying to do is replicate that index. And we're replicating to its truest form. And we're wanting to give clients the ability to buy into these companies. Now, when we talked about it earlier, there's actually a large portion of companies from Asia. So companies like Samsung SDI, LG Chem, Sanyo, BMW even, they're all looking at, when we're trying to identify those companies that are looking at energy storage projects. So what are the different projects around the world? Now we look at Tesla, and they've done the South Australian battery project. So we're looking for those types of companies that are looking in renewable energy and battery technology, and we're looking to invest in those companies on the battery tech side. There was an article the other day about an Australian company that was looking at the lowest cost way to produce solar panels, flexible, low cost solar panels. So we're starting to continually develop into this space, and we're only at the early stages here.
Oh mate, completely. Like it's one of those things where you look at where we could possibly go with battery tech going forward, and what we're trying to do now and today is probably hindered a lot by that tech itself. So there's a lot of growth there.
Yes.
And there's a lot of spaces where we can actually look to improve on it anyway.
Yeah.
So it's interesting stuff. I'm going to keep an eye on that and see how the technology goes and develops, but I think it's interesting that you're in there as well with the skin in the game. Yeah,
and I think for us, we're looking to broaden out the idea of the thematics and the sectors, and so you'll probably see more of that. That's going to be the biggest piece with some of the ETF providers. Even globally, we've seen that, thematic investing, thematic ETFs. We've seen that from BetaShares as well, with their soon-to-be launched blockchain ETF, for example. So this is the idea, we've done Robo, they've got their Hack ETF, which to that point was actually the best performing ETF for the month in August, actually.
Yeah, for sure. So let's roll into that. How did what are the inflows and outflows for the month?
So with inflows, as I mentioned before, the BetaShares A200 ETF had $108 million in. That was the largest inflow. And in terms of outflows, it was actually the SPDR ASX 200 ETF, STW, which is still the largest ETF in the country, with nearly $3.7 billion under management. But that was the one that saw the biggest outflows.
Interesting. And any other sort of things that we've seen over the last month that is worth mentioning across?
Look, I think the biggest thing was in terms of providers. So we're actually seeing Vanguard is still the largest provider in terms of ETFs. Now they track nearly $12 billion worth of products, followed very closely by iShares with $11.7 billion of ETFs under management. And SPDR, so State Street's ETF business, they saw nearly $241 million out of their total business in terms of assets. So clearly there's a bit of a shift there. And my thoughts are around that is you're seeing BetaShares really launch a low cost range. They've done that with A200. They're about to launch a low cost global equity fund, a low cost fixed income fund as well. So they're really trying to sort of, I guess, shake the market a little bit, and in terms of that low cost space and the big plain vanilla indexes, and really try to take to the big boys of Vanguard, State Street and iShares.
Absolutely, and there's market share out there to be able to do that as well. I think being cost effective and competitive is very, very much one thing, but having the products and the scope of business to be able to do that is another. Do you see that linking very much so with the market? A lot about inflows and outflows, and for me I'm just thinking, okay, well, it's more than usual, which is not a worrying thing. It's just the way that the market ebbs and flows. So is this something which is a bit of an anomaly?
I think depending upon some of those investments, so the big investment into A200, the big outflow from STW, could that be a switch to a lower cost option by an institutional client? That's more indicative of a client's view around how they want to position their portfolios and what they're trying to do to really lower the cost of their portfolios. But you are seeing a bit of a shift in terms of Australian equities. So when we look at sectors, broad Australian equity ETFs was the largest outflow last month. Now, we had reporting season. We had a number of companies in reporting season perform below expectations. So that probably is a bit of a trend saying, okay, well, let's exit the market. Let's go. And we actually saw global equity funds had the biggest inflows, and global and Australian fixed income as well. So being slightly defensive, there's a bit of volatility out there. You've got the trade wars, Trump's tweets here and there, some new leak coming out, etc. So there's a bit of uncertainty macro-wise. There was uncertainty around the Turkish lira, European markets, Brexit. So there's a lot of different events going on around the world, and a lot of clients may be sitting there and saying, okay, well, let me just exit the market, be a bit more defensive, maybe go into cash as well. For sure. And I think that is a real testament to the market itself. It's good to see that investors and essentially that kind of funds under management is moving around to where it should need to go. If people think there's obviously something, we don't know what's going on because nothing's really been confirmed either way, but it's good to see that there's the investor side of things is starting to diversify for those changes if they were to come in. Yeah, and I think also the things around what ETF Screws are doing, what BetaShares are doing, and also some of the other pros, really trying to launch sort of some of the niche thematic plays, some of the plays around sectors and specific regions. It gives the ability for a client to then be very tactical in their portfolios.
Yeah, for sure. Kanish, thank you very much for coming once again.
No, thanks for having me.
Thanks again for tuning in to the Nestegg monthly market ETF update powered by ETF Securities. Very much enjoyed learning about the inflows, outflows, and a few different thematics that we're seeing across the market. It's one to keep an eye on. Thanks again for tuning in.